are here with two gentlemen who are probably a lot smarter than I am on the topic of data and AI. So I want to introduce you. Well, I'll let you guys introduce yourselves because you could probably do a better job. Do you want to start, Sohail, and then we'll go with Yannis?
Yeah, sure. So my name's Sohail Raja. I work for Societe Generale. I'm the Chief Digital Officer in the UK, covering the wholesale business with quite a large focus on the global markets business and looking at our digital initiatives over the last 2-3 years in particular. And one of the areas we focused on is obviously data science, and that'll be something that we'll talk about in today's panel.
Okay, thank you. Good morning, everyone. My name is Yannis Kalfoglou. I've been involved in the field of AI for 26, 27 years now. I've been through different industries. Lately, I'm also doing AI strategy and blockchain strategy for large clients and different projects. I've been in the capital markets on the asset management side. I've been involved with some AI solutions, especially in the robo advisory space and the data science field, and looking forward to an exciting discussion today.
Cool. So I think let's just go straight into it, guys. We have a few questions. So the first one's for both of you, if you could have a go at it. So what is the current state of play for AI applications in finance? What are you seeing?
Do you want to start? Or
Yep.
Okay. I mean, from our perspective, from what we've seen, particularly in the last 2 years, we spent a lot of effort before that around setting up our data platforms, looking at data lakes and getting that infrastructure in place, looking at our unstructured, structured data, putting that all planning together. Having done that, the last 2 years, we've spent a lot of time around machine learning opportunities within the market space, in our financing business, syndicated loans and other business areas as well. And I'll go through some examples. But I think what we're seeing now is there was a lot of talk around data science and AI. I think what we're seeing in the market space is a lot more examples of something being actually delivered and working and actually being used. And we're learning from that and continuing revising those models on a regular basis. And we're seeing that at least in the capital markets perspective, a lot of banks are now offering that as a service with a data science group, whether that's separate or embedded or ingrained within the various organizations, but we're bringing it back down to what the client needs may be. And we've really pushed that data effort or AI capability to what the clients may want from us and evolving that on a regular basis.
Yeah, so from my perspective, I would say that I just noticed that the panel says become reality. AI has definitely become reality in the past few years in the financial services sector, pretty much in the entire spectrum of financial services, from sell side, buy side, everything in the middle. It's something which is maturing and maturing nicely. Banks, asset managers, brokers, clearing houses, even regulators, everybody's feeling more comfortable with the technology now. There is more know-how with regards to AI, especially the branch of AI with regards to machine learning and data science. We also see that there is a new cohort of talent entering the market because, especially on the educational sector, there is a lot of push, not only from universities, but also on the national policy level to produce new data scientists. You've probably seen over the past maybe 6, 7, 8 months now, pretty much every major economy of the top 5, 6, they're launching AI national programs, which means that we're going to have thousands of PhDs in AIs and data science in the next few years. The solutions have been applied in certain segments on the entire food chain, so to speak, in the banking sector, but they have been quite successful so far. Just looking around what's going on with regards to the funding for fintech startups and the sort of a market share they have taken from incubators, it's a good enough indicator that the space is maturing. And I think incubators are responding very nicely, which is, as Sohail said, they're already introducing their own data science teams in large institutions. So that's the current state of play.
So we know that big data and AI is being used for transactions and investment on an enterprise level. How do you see the impact happening at the consumer level with like robo advisories, and what are the benefits to everyday consumers and everyday people in financial, with financial inclusion, but also banking? Do you see any of that trickling down?
Yeah, if I may go on that one. So yes, robot advisory is something which is very close to my heart. I was involved early stages, looking at kind of driving in investments and the data science behind it. And it definitely lowers the barrier of entry. Investments wasn't exactly something which was open to the masses out there. With robo-advisory and of course with the digital generation, things are not more easier. It's a much lower entry to investments. The tool is becoming more sophisticated. We're already in the kind of the third generation of robo-advisors. The first ones was more like passive investments, very low fees, following index trackers and specific segregated funds in ETFs. They were very successful to a certain extent, and of course, the early trailblazers, the wealth front and the betterment. But then, as progressed, they figured out that actually it's quite expensive to maintain this kind of customer acquisition because the fees were very low, the margins didn't quite match up the business plan. Then we had the second generation, which is a little bit more sophisticated robo-advisors, and also the incubators are entering, which they offer specific tools like rebalancing your portfolio and tax harvesting and other things which you typically need an IFA to do it. And then we have almost the birth of the third generation of robo-advisors, which is kind of a hybrid. So without really excluding the IFAs and the specialists, you have kind of a digital front end to your investment offering. And of course, we see, you said, triple down some interesting innovative solutions so people can invest their spare change, for example, using this kind of apps these days, which is an interesting approach from the social inclusion perspective.
Cool. So I think my view on robo-advisors, obviously it was quite a big topic a while back, and a number of fintechs or startups came about offering wealth management or wealth advisor portfolio products. But I don't think we've seen the take-up as what was expected. I think that goes back to trends becoming the reality. I think they were too simplistic, and also when you worked out how much effort was involved and the cost of that advice in terms of the end product and what the performance was of that product, that clients were finding actually it's interesting but not exactly the game changer that they were probably expecting, or the hype that was put in play. What we're finding interesting now is we're seeing AI machine learning is looking at the funds, the performance of the funds, being able to calibrate that, and also be able to tell clients, this is what we think, using these models, this is the kind of performance we might see for you to directly invest in, not for us to provide advice on, but to give a view to a client in terms of what that price point or capability may be. And we're also seeing portfolios being much smarter in terms of the AI and machine learning techniques around that, to give more future valuations of or lifetime valuation and the future valuation of what a client may expect. So I think it's gone back to perhaps an advisory model with these various levels of tooling and information that clients are looking for. It's that level of sophistication of information that clients are looking for.
So it seems like there's no going back now that the sort of cat's out of the bag. It's inherently built into the products and the models now. Do you see any game changers in the horizon, whether it's through faster computing, through more investment, or through new products? I mean, what's exciting just beyond the horizon?
I think that's always difficult to see what's going to be ahead. I can give you some examples of what we're working on and how we're evolving from that. I think the observation I have at the moment is we hire quite a lot of graduates, and one of the things we're seeing on the graduate pool, for example, you mentioned universities, Yannis, that's something that we're working with quite closely, is the university pool talent has increased tremendously over the last year or so in terms of people who want to be involved in data science as a field versus financial markets or sales and trading. So we're seeing a higher number of people who want to be involved in data science. So it's certainly moving in that mold that I see in the future, that a data science or a technology-driven individuals within the organizations are going to drive new opportunities. So that's one aspect. And then the other areas that we're seeing real change is on the behavior of our sales and traders in terms of our workflow, in terms of using tools to provide pricing information. So chatbot doesn't sound particularly exciting, but we use a chat parser quite heavily with our clients, just because of the behavior that we're seeing with our sales clients, our traders and operational teams. That Bloomberg is obviously a big chat environment for people to provide ideas or to get pricing on, and we've developed our own chat parser that sits on Bloomberg, or something called Symphony as well, that allows a client to put in a very simple request in a natural language. We're able to produce a price back pretty fast compared to our other engines, and we've seen a multiple increase in number of price quotes, trades that have come through just from that piece of what may seem as a basic piece of kit that we've offered. So we're just seeing the beginning. I think we're going to see that, as an example, evolve even more, and we're going to see more iterations of communication and wanting information and wanting it very quickly. And of course, the computing power and the advent of what's happening with that is only going to get better and better. A lot of these machine learning techniques, as we all know, were around 20, 30 years ago anyway. So it's been the ability with languages like Python to pick that up, but also the computing power to speed that through. But also Python is a language from an investment banking perspective which can be picked up relatively quickly because we're using VBA Excel anyway for our quants guys or quants team. So picking up the tools and the processing and understanding the data and the computing power, I think are going to add to the changes that we see.
Yeah, in terms of changes, the interesting thing, Luis, is that now that the machinery is sort of well understood by large teams, both at the large incubators and also startups, now we're also seeing that where do we actually apply this machinery and these mechanics. So one of the things that's coming very popular lately, which has always been the case, especially Wall Street and big centers, was the use of alternative data. But the way that you use alternative data these days with all this machinery in the background is very interesting. So we live in an area that you can literally have drones flying over car parks, and they give you more accurate information of what is the propensity of particular customers to buy something. We live in an area that you can actually track the movements of people going into a store, the footfall, and you can figure out what will be the sales to the exact hour and minute, whereas typically you had to wait for the quarter sales that have to go after 3 months. We live in an area that you can track the containers that go all the way from China to America to sell a particular mobile phone and figure out what's going to be the sales figures for that manufacturer in that particular quarter. So all that scenarios are now becoming more or less a reality because of the machinery and we understand how it works. The machinery itself, it's keep improving. One of the trends that, as you said, game changers is coming up is that machine learning is great, and as Sohail said, has been around actually for a little bit more than that, but it's been around for a long time. But still, it's a bit of a dark science, as I like to call it. However, there is a lot of continuous effort now from some of the largest tech conglomerates out there to make the machine learning as automated as possible, the trend of the auto ML or ML 2.0, whatever you want to call it. If that happens, for me, that's another big game changer, because essentially you just need to select the data and then the output comes out. You don't have to deal with other things. You have to do hyperparameter tuning and figuring out what your auto conduct has to be and all these kind of things, which really takes so much time. And another change that's coming up is that now that data are really available in abundance, especially in this industry, fintech industry, it's one of the great values that you can actually do with regards to machine learning applications. So that's what I see coming up.
Now you mentioned, now you can connect variable data sets like drone data or real life traffic data. Like, what are some of first the limitations and then possibly some of the dangers on, letting algorithms run sophisticated financial systems?
Yeah, the thing is that algorithmic trading has been around for maybe at least 30, 40 years now, and to a certain extent has been successful, but we also had blunders with algorithmic trading. So the thing with the data is that although there is an abundance of data, does not necessarily mean it's it's a benefit you can have straight right off the bat. You have to do a lot of data wrangling, and you have to make sure the data that you have are clean data rather than just big data. And that's one of the focus of a lot of research and engineering these days. How do you get this thing done to the point that you can actually trust the recommendation you get back from the machine? It's almost like a symbiosis kind of combination where it's not a replacement for the process, it's an augmentation. You augment the portfolio managers and the fund managers to make the right decisions by crunching through all this data and making recommendations, which then the humans should always have the final say. But the abundance of data, I think it's a great thing, and we should take advantage of that.
So I agree with that. I think we're going to see even the data science model changing a little bit, where you've got engineers in terms of understanding the computing and understand the programming, but also people working with data scientists. And it may be a different breed or different banding who have a lot more understanding around what the data is providing, what the value is going to give, what are the nuances that a salesperson doesn't see immediately because of that understanding and knowledge that they have. So it's going to be a combined sales, trading, data science, and somebody who actually understands the data, whether it be unstructured, whether it be non-searchable, whatever standard that data may well be, is understanding what that is producing and what the outcome could be in terms of developing new investment strategies or trading ideas that clients fundamentally are looking for. So it's still going to need come back to your point, still need a large human element.
Cool. And Sohail, I mean, with your role at Societe Generale, how have you seen the technology changing, and how are larger firms adapting? Are you seeing an increase in hiring of data scientists, or an increase in the software that you're using to enhance?
Yeah, sure. So I can add a few things. I mean, in terms of our digital office area, it's not we've got about 70 people now in total, and that covers a raft of things from UX, UI, prototyping, data, API, integration, everything to do with agile methodology, and we've implemented that. It's a very small team, but we've proven that model, and I think looking at what fintechs have done in terms of their setup, in terms of agility, the lean management, that is something that we introduced at SocGen over 4 years ago, particularly on our SG Markets business-to-business platform, which is quite unusual because it really does have a fintech feel to it, and I think that's how we've certainly dealt with the challenges going forward. And in terms of technologies, we've taken on, as I mentioned before, Python is something which is quite used a lot within the organization from a programming perspective. But it's not just about the programming, it's about what we can do with those tools and technologies, working with everyone in the business and on the operational side, legal and compliance as well, seeing how do we improve that whole experience from onboarding a client to getting them electronically onto trading on the platform, to actually servicing that client all the way through, and having that whole team of people involved in that process, rather than it being teams of people. It's actually somebody really owning the problem or owning the challenge within each of those areas. So taking that fintech approach, but within a business-to-business framework.
And Yannis, from your role, I mean, how are you seeing companies adapting and changing to the new requirement to use data more effectively and efficiently?
I think they are adapting. One hand, they have to adapt because there is a regulatory pressure to do so. So basically, they don't have many options. But then at the same time, they're adapting because they see that they can use this technology, we call technology, as a competitive advantage. It's simply, which basically is the FOMO, fear of missing out. You can't really not do a data science program or a machine learning program, or having some kind of automated advisor if you're in certain segments of the financial services, because then you are risking of being left behind. What I'd like to add with regards to the segment and the cohort of new data scientists coming in is that, especially in the financial services, it's a great field to do a career there, because you could get your PhDs or whatever in data science, and then you can do in different sectors. But in the financial services, you're dealing with some extremely interesting, complex programs and problems which haven't really been seen in other markets. It's extremely volatile. It's high velocity data, and of course it's extremely important to the world's economy, because if things go wrong, as they went wrong 10 years ago, then everybody suffers. So I think for me that's a great thing of where all this talent is going to be absorbed, and I think there is great opportunities for both the incumbents and the fintechs in this space.
Cool. So I think we have some audience questions on the screen that came from the Slido app. So let's take a few of these. If we can get some short answers, we can get more of these through. So the first one is, what challenges are there from a regulatory perspective in terms of robo financial advice, and how long are we away from overcoming them?
So it depends what that advice is, and also who's providing that advice. I think we have to break that question down. If it's purely a robot that's generating advice that isn't validated, that isn't, you can't go back to the model and say, this is how we achieved, or the robot in this case provided that advice, then clearly there's a challenge there. But I think that we have caveats in place in terms of any of that financial advice has got a model behind it. It's just the engine that's producing that product or service is what we've developed, not necessarily the thinking or the knowledge or the backup is still within the organization itself. So I think we have to break that down into into its relative parts. We're always talking to the regulators anyway for a number of reasons, so that we fully keep them involved and on board in terms of what we're doing, not just from a technology perspective, but also from a product perspective and what's driving that from the fundamentals.
Cool. So this next question might be a little sensitive, but which investment firm is leading in integrating machine learning into an AI AI into their investment process? Let me guess, SocGen maybe?
Obviously SocGen,
Yeah.
no. So well, let's put it this way. Our approach is different. We haven't gone out and said, we need to go and hire 200 or 250 data scientists, right? We're not that kind of ilk. What we've done is say, where do we want to apply artificial intelligence and machine learning within our business areas?
Yep.
We're very organic. We do evolve. Derivatives is our strength, cross-asset derivatives. So mixing our quant teams with our data scientists, with business teams is how we've approached it, rather than hire 100 data scientists to look at one particular problem. So it depends on the kind of question you're asking, what the value is out of that.
And for Yannis, what's the single largest risk when AI machine learning advises on an investment idea?
I think going down to the science and engineering bit, it's one of the things that is becoming very popular these days, which is explainability in AI. You need to be able to understand why the model reached a particular decision and output, and to explain to you the steps that they followed, which at this point in time, depending on the flavor of machine learning you're using, you might run into the black box issue. So there is a lot of active research in this area, trying to figure out how to make AI explainable. We're not there yet, but there is progress made. And I think that is the single risk. You want to be able to understand why the decision was made in a particular way. I think that's the biggest risk.
Okay, and let me go to that question actually. Can you mention an AI example that's an example of a proven AI technology that's actually worked really well?
Yes, of course. I mean, in the institutional space, one of the things with regards to distributions is that typically asset managers, they package all these products, which then they have to go to the distribution channel, and then from there goes to IFAs, then there goes to clients. That's a very simplified version, by the way, but one of the things you want to do that is to be able to identify which targets and which target segments in the market you're going to hit. So AI, from the machine learning flavor perspective, can help that to identify which are the people you're going to target because of doing certain mostly statistical analysis on the propensity to buy, and also recommendations of what is the product they're going to sell you based on the lifestyle and your investment style, which is all data that you can glean either through questionnaires or through other data pipes you have available from their perspective. That has been applied very successfully at both fintechs and also incubators.
Cool. And Sohail, this one's a human versus machine question. So what skills must a retail financial advisor develop to compete with one of these robo advisories or AIs?
Well, luckily, I don't cover retail. But anyway, I can give a view on that in terms of if I look at our sales and our financial advisors. So I have to be careful what I say, right? So we have to make sure our sales teams and the people who are facing off to the clients, whether that be customer services or operational or whatever that touch point may be for our clients, understand the actual technology, understand the background to how that product was developed and how that was priced. And it's making sure that they've got skills that are not just technical, but also varied across from technical to actually client-facing. So it's a number of skills that we're looking for. We're really looking for people with all-round capabilities when we're facing off to clients.
Cool. I think we might have time for one quick question, but what's the most advanced application that you can think of for an AI on a global trading platform?
Yeah, so just quickly on that one, I mentioned the chat parser, but we've evolved from that because obviously we get a lot of pricing requests coming into the banks, and that's where there's a lot of data, and we hold that on the various structures. So one of the things we've been looking at is our pricing models and how we affect pricing models going forward in terms of recommending a certain price or certain structure to a client. So there might be a bond issuance, for example, in our GLFI business, and we might be able to predict for a client what would be the next bond to buy at what coupon payment, and where we've done that a number of instances with clients as well. So that's another real example that we've delivered.
Yeah, for me the biggest one is prescriptive analytics, basically not only predictive, figuring out why it happened, but actually what should I do next. So prescriptive analytics is the biggest thing with regards to the next time series when it comes to high frequency trading and in the trading sector, especially with regards to commodities. That's one of the big things that AI can help. It's already helped with certain segments in the market.
Okay, so it's a good idea for any of you startups looking to carve out a niche if you're a data scientist type. But that's our time. Thank you to Yannis and Sohail for their input, and hopefully we've all learned something about Robo, AI, and machine learning. Thank you very much.
Thank you.
Thank you.